My name is Susie Fabricini, and I developed the fun and sexy finance way to control, manage, and grow your money. Because finance should not be boring and complicated. What could be more fun and sexy than being able to do what you want to do, when you want to do it, where you want to do it, and with who you want to do it? What if I were to tell you that I can show you how to get your money working for you so that you don't have to work for your money? Wouldn't that be great? Well, today I'm going to tell you 3 steps that you can take towards financial freedom. You know, a lot of people have fear around money. It's very common. Money is emotional. Every single financial decision you make has some element of emotion tied to it. And if you're an entrepreneur like I am, you make a million, well, maybe millions might be a little bit of an exaggeration, but you make hundreds of financial decisions every day. Each one of those decisions is carrying some emotion, which means that there's stress involved. You need stress like you need a hole in the head, right? Well, what if we can set up a system that automates a lot of your finances so that you don't have to make so many decisions a day? That's part of my system. For 30 years now, I've been helping women to get control of their finances, to get over their fears, and be able to enjoy the success, the financial success that they deserve. I do it through my courses, my YouTube channel, my social media, and my books. So today I'm going to teach you 3 rules based on 3 words: collect, contribute, cash flow. So the first word, collect. We're going to be collecting compound interest. And I'm going to explain to you how to do that. The second word is contribute. You will be amazed at the results that you can have by contributing to a Roth IRA. And cash flow. The whole point is to cash flow passive income. So I'll talk to you about that too. We're going to start with the power of compounding. Einstein said the most powerful force in the universe is compound interest. He also said, he who understands it earns it, he who doesn't pays it. You don't want to be paying compound interest. And I will show you why. I'm going to show you first, we're going to talk about the difference between simple interest and compound interest. So simple interest is when interest is added to the base and each subsequent cycle of interest is calculated using only the original amount, not including the added interest. If that sounds complicated to you, I don't blame you. And I'm going to show you an easier way. I'm going to demonstrate it for you. Compound interest is when interest is added to the base, and then the next cycle of interest is calculated on the total of the original amount plus the added interest. Also, sounds complicated. I am going to demonstrate it. Simple interest is when you're getting interest on your original amount. So for example, let's say you're getting 100% interest on your dollar for 30 days. I know that doesn't happen in real life, but let's just use these figures because it makes the math easier. Okay, so you got $1, and the first day you're going to get 100% interest on your dollar. So now you have $2. The next day you have $2. You're getting 100% interest on your original dollar. So you're getting another $1, and now you have $3. Next day, 100% interest on your original dollar. Now you have $4. Next day, 100% interest on your original dollar. Now you have $5. Goes on like that for 30 days. How much are you going to have at the end of 30 days? Well, if you said $31, you are correct. So with compound interest now, with compound interest, you're getting interest on the original dollar and on the interest. So for the first day, you have your dollar, you get your 100% interest on your dollar. So now you have $2. The next day, you've got your $2. You get 100% interest on your $2, which is $2 more. And now you have $4. So the next day, you're getting 100% interest on your $4. So another $4, and now you have $8. Next day, 100% interest on the $8. Now you have $16. Next day, 100% interest on your $16. Now you have $32. And it goes on like that for 30 days. Now, how much do you have on your 30th day? Well, if you said $500 million, and I'll bet you did, then you were correct. And do you see what a huge difference that is between $30 and $500 million? I think that's kind of a lot. But here's the thing. When you look at the first transactions, you're going 1, 2, 4, 8, kind of boring, right? But then when you get further along, now you're going $1 million, $2 million, $4 million, $8 million. Not so boring. And then when you get down further, now you're going 100 million, 260 million, 500 million. Oh my gosh. If it took you 30 days to get to $500 million, how many more days do you think it'll take you to get to $1 billion? Well, if you said one more day, you were right. $1 billion. That's where it gets really exciting. The longer that you're in it, it's all about how many cycles you get through. Because the further along you get in the cycles, the more dramatic your results are going to be. And so that's why compound interest is so amazing. So you can see why it's so important to be in it for a longer period of time. Meaning, you want to get started as soon as possible. The best time to start, of course, would have been years ago. Second best time is today. And just for an example of what I'm talking about, a 24-year-old saving $5,000 a year at 10% growth rate would have $1 million saved by the time they were 55. A 34-year-old saving $5,000 every year at 10% would have $357,000 saved by the time they were 55. And if you started at 44 years old saving $5,000 a year with 10% growth, you would only save $107,000 by the time you're 55. It's not too late to start if you're older. It's not like it's hopeless if you're older. It just means that you need to learn a few more financial tools.
Well, I come from a background where there's a big secret around money. It was a taboo subject. Nobody talked about it. It was this kind of mystery. What I got from this is the importance of using your time wisely, and the time is your friend when it comes to saving and compounding. And I learned that. But also, what you gave me, Susie, was that even if you don't catch the train early enough, there are still ways that you can kind of get on board and still, relatively speaking, do well for yourself. So it's never too late. As you pointed out, it's never too late to start. What I loved about how you presented it, if we can be told how to improve our finances, which you have done, and do it in a fun and sexy way, then hey, I'm for fun and sexy and money. Thank you, Susie.
A lot of times I hear people complaining about the wealthy millionaires who don't pay any taxes. And I always want to say to them, instead of complaining about what other people are doing, why don't you figure out why they're not having to pay taxes and then do that yourself? You can. And I'm going to show you one way that you can do it. And it's something that the billionaires and the millionaires do. It's using tax-free retirement accounts. So this is where the word contribute comes in. I'm going to show you how you can contribute to a tax-free retirement account so that the money that you contribute grows. And when you take that money out, you don't have to pay taxes on the growth. Okay? You already paid taxes on the money when you first earned it. But now you're not going to have to pay any taxes when you take that money out. So we're going to take a look at the effect of taxes on an investment. We're going to look at a $10,000 investment and what would happen if you kept it in there for 28 years, growing at 7% interest, and you're in a 25% tax category. So if you have investments that are not in a retirement account, you're having to pay the taxes every year on your growth. Then at the end of that 28 years, you're going to end up with $41,900. However, if you have your investments in a retirement account, in a traditional retirement account like a 401k or an IRA, then at the end of 28 years, your $10,000 will grow compounded. Your investments are going to be compounded because the money doesn't come out to pay taxes. It stays in there. So you're getting your growth on your gain. And that way, even though you have to pay the taxes when you take the money out, you still end up with more money than you would have if you were paying yearly taxes. So now you have $49,866. But if you put your money into a Roth IRA or a Roth 401k, now your $10,000 interest is growing tax-free, it's compounding, and when you take the money out, you're taking it out tax-free. No tax money is coming out of it. That is the beauty of the Roth account. And that's why it's my favorite financial tool. So when you have a choice between a taxed investment, a tax-deferred investment, or a tax-free investment, what are you going to choose? You're probably saying tax-free investment, but most people have their money in tax-deferred investments because that's what they know about, because that's what their employer sets up for them, or that's what their accountant recommends. Why would their accountant recommend the tax-deferred investment? Because your tax accountant is looking for ways to reduce your taxes for the year that he's working on the taxes. And so when you put your money into a tax-deferred account, you're able to take that tax deduction. That makes him look like the hero because he just saved you money on that year's taxes. But if you look at your bigger picture, you might want to put the money into a Roth account and put off taking that tax deduction so that you end up with more money at the end. And I'm going to show you, if you have the money in an IRA, you deposit $1,000. no tax deduction. Assume an 8% growth over 10 years. You will withdraw $2,159 in 10 years. You won't have any taxes to pay, so you're going to keep your $2,159. If you put the money into a standard IRA, that same $1,000, now you're taking that tax deduction that when you put the money in, so your 33%, say, you're going to save $330. Now you get that same 8% growth over 10 years. Now you're going to withdraw that same $2,159. However, now you're going to pay that 33% taxes. And so that's going to be, now it's a bigger amount, right? Because now it includes your growth. So now you're going to end up paying $712.47. So you saved $330, but then you paid $712, and you get to keep $1,446.53. So you have three alternatives for taxing retirement accounts. You get a tax-free investment, tax-free growth, or tax-free withdrawal. So the tax-free investment is when you take the deduction, you put the money in, and you take the deduction at that time. You can do that with a 401k or an IRA, a traditional. Then tax-free growth, you get that actually with the 401k, the IRA, and the Roth. But the tax-free withdrawal is only good with the Roth. You can't have all three. You can't take your deduction at the front, have tax-free growth, and have the tax-free withdrawal. So you can only have two. What's the best way to go? I say 2 and 3. Now, why doesn't everyone use a Roth IRA? Because there are limitations. You can't open a Roth IRA if you're single and earning over $153,000 a year. You can't open a Roth IRA if you are married, filing jointly, and together you make over $228,000 a year. And there's also a limit on how much you can contribute every year. The maximum contribution for a year is $65,000 for most people. If you're over 50, then your maximum contribution is going to be $75,000. You get a special extra opportunity to catch up if you started late. What about all those millionaires? How are they using a Roth IRA? Well, a lot of them probably started early on and put the money in there when they were younger, and then it grew throughout their lifetime. Because the money you can still manage the money even if you can't contribute more. There's also a loophole. It's called a backdoor Roth IRA. And I'm not going to go into it here, but just know that it exists. Another option for high earners is to use cash value life insurance. The only thing is that you need to be in good health because age and health determine the costs of your life insurance. And life insurance is another thing that you want to learn about because it's an amazing financial tool. Okay, remember when I told you that there is a way that you can just have money come to you without you having to work for it? Well, that's the topic that we're approaching now. Cash flow through passive income. So what is passive income? There's passive income and there's active income. Active income is the money that you are working for. Passive income is the money that you're not working for and it's just coming to you. Now, here's the thing. With passive income, there's a setup time to it. So it's not just instant. You have to set it up so that there's some work involved at the beginning. But then you get to reap your rewards afterwards. So there's a number of different ways to get passive income. Some of them are going to be through rent. Doesn't have to be just landlord type of rent either. There's other things you can rent out. Or you can get income from writing a book and selling it, or licensing some of your photographic images, or creating a course that's online and you're not having to be actively involved in it. Some more ways. Okay, a business. If you have a business that you don't actually have to work in, but you get a paycheck, that's great. What else? So those are some ways, but the way that I'm going to talk to you about right now and explain to you is going to be dividend stocks. So when you buy a stock, a share of stock, you're buying a little piece of a company, a little tiny piece, but a piece nevertheless. And the more pieces that you buy, the more of the stock that you own, right? The more of the company that you own. And most of the time, the value of your stock goes up and down, but you don't really get the full advantage of that until you sell the stock, unless you have bought a stock that pays out dividends. Now, some stocks, they pay out a share of their profits to the shareholders as dividends. This is where it gets good, because those dividends that are coming to you, that's passive income. But it's also passive income that you can compound, because you can set it up so that as soon as you get the money from that, as soon as you receive the dividend, it goes back and pays and buys some more shares. So then the next round of dividends is being paid on your original shares plus your new shares that you bought with your last dividend. So now your dividend payment is higher. And then you do that again every month or every quarter, depending on how often the shares are being paid out. The dividends are being paid out. And if you'll remember from when we talked about compounding, the more cycles, the better the deal. So you can, when you're choosing what stocks to buy, you can look to see how often are they paying out dividends. Is it monthly? Is it quarterly? Is it annually? And what's better? We know that monthly is going to be better. Maybe not a whole lot better, but better nonetheless. So you got your compounding happening. Now, how do we make it tax-free? By owning it, owning your shares in a self-directed Roth IRA. And you can open those up through the brokerages. Just make sure it's self-directed. That means that you decide what you're going to purchase, and you make the purchases within your Roth account. I have one at TD Ameritrade. You can set them up with Schwab, any of the online brokerages. Yeah, so E-Trade also. But just think about it. You're being able to combine the compounding and the tax-free for passive income. Aren't you glad that you watched this video? So would it be okay now for me to introduce you to my family and to the system that allows us to live a life where money is not a concern? This is me and my husband, Joe, and our so smart and so lovable Oliver have a great life together. We in Idaho. And this is me with my two daughters, Suki and Maya. Maya is a poet, an actress, and a restaurant manager. And Suki is a personal trainer. And they live in California. But I do get out there to see them fairly frequently and sometimes bring them out to Idaho to spend some time out here. Last year, I was thinking about the fact that so many women have lots of fear and anxiety when it comes to money. And I was thinking, how can I help them to get past that so that they can have the financial success that they deserve? And so I came up with some theories and I wanted to put it to test. So I gathered some women together who were suffering from financial stress. And I put together a beta program. And over the course of the year, we worked together on mindset and putting systems in place and learning about different financial tools. And we actually had a really good result. This is Paula.
I've learned so much from Susie's program. I started out feeling really hopeless and feeling like I didn't really know what I was doing. I had no money in my bank account. Once I started with Susie, I just am now able to pay myself and support my family. I just feel hope again.
So we did have some really good results from that program. Now, you may have experienced people telling you that you need to save more money, you should cut back on your expenses, give up some of those little things like the lattes. Well, I'm here to tell you, drink the lattes. The lattes are not the problem. And why should you deprive yourself of these little things that make you feel better? The problem is that people are spending too much money paying taxes and interest. And the solution is not to give up your little pleasures in life. The solution is to pay less taxes and pay less interest. And so that's what I'm teaching. That's what I taught the women in my beta testing program. We found that we worked first on mindset and where the where the financial stress really comes from. And then we worked on gaining confidence with their money by learning more about how to get their money working for them and how money works. And that leads to having more wealth. So, what if I told you that there's finally a way to get financial education without having to spend endless hours in a classroom or reading books? Imagine what it would feel like to just know that you can do what you want, when you want, where you want, and that you know enough about money and finances that even if you experienced a financial disaster, you could handle it and you would be able to pick up and rebuild. That's the key, because learning about money doesn't mean that you're never going to have a financial problem again. It just means that you're going to have the tools to deal with it. So imagine what that would be like, knowing how money works, knowing that you can create passive income for yourself. Imagine being excited at the end of the month to calculate your net worth because it's going up every month. Now, I know that a lot of you are probably thinking, oh, I don't want to spend time and money learning about finance. How boring and how difficult and complicated that will be. And I get it. But the good news is that I created a membership program It's based on last year's beta testing. There's a step-by-step learning system to gain control of your finances, and it's easy. It's in short spurts of time so that you're not going to get bored. You're not going to have to spend a ton of money on multiple courses that don't work. It's going to work despite having a short attention span. Squirrel, right? And you get to learn at your own pace. You can do this. I'm Susie Fabricini, and I wrote the book, Protecting Your Assets from the Zombie Apocalypse. I wrote it because when I was a financial planner, I found that a lot of the information out there, even the information that I was given by the companies I work with to hand out to my clients, was full of financial gobbledygook. And I wanted to have a plain English resource that I could give them. So while I was working in finance, I was learning so much. But you know what? There was a problem. Even though I was learning about all these different financial tools, it was very hard for me to put them into action in my own life because my finances were so disorganized. I didn't really know what my numbers were. I didn't really know what it cost for me to live my lifestyle. So I had to come up with a system to organize myself so that it would be really easy for me to set up my financial plan, figure out which financial tools were the best ones for me, and really get control of my money. So if you have messy finances, don't worry about it. It's very normal. It's like having a closet that's just crammed full of stuff and you're just pushing things back in the corners. So eventually you don't even know what you have in there anymore. And a lot of things that are in there that you bought are going to waste because you forgot you have them. So that's a waste of money, right? Just like when your money's not organized, you often don't know what you have. And then that's a waste because it's money that you can't put to work for yourself. The good news is I finally decided to share my step-by-step system as an online training. And now that I know it works, I can't wait to share it.
Hi, I'm Crystal Meisner. Susie Fabricini's program has taught me so much. It's really incomprehensible. I have learned to find my money, number one, track it down, find out where it's at, what it's doing, and why it's just sitting there, and then put it to work. And where I'm sitting a year later after doing this program is a much more comfortable feeling than where I was last year. Even with all the ups and downs that I've gone through financially in the last year, with crypto markets, et cetera, going crazy, I've still found such intel that I don't think 100 books could have taught me all of this. I certainly wouldn't have read them all. So if you're struggling financially, if you're always finding yourself borrowing from Peter to pay Paul and borrowing from Paul to pay Sam and going paycheck to paycheck and juggling your money to pay your bills and not having much in the way of savings, not having anything in investments. And even if you have some of that stuff and you've got some of that, you're still going to learn stuff. And you're going to learn how to really take what you have in the way of income and make it work for you better. Take Susie's program. By God, it'll save your life, your financial life.
Crystal, thank you. So my program is by application. We want to be careful about who we let in because we don't want you to be wasting your time and your resources if this is not the right program for you. But if you do apply and are accepted into my membership, by the end of the year, you will know your numbers. You'll feel confident and in control of your finances. You'll learn the money rules and the financial tools and how you can use them. And you'll know that there is more than one way to reach your goals. You'll have savings, investments, and fun money. You'll sleep better at night knowing that you have a plan. And today it's ready for you. Introducing my Fun and Sexy Finance membership. And here's what you'll discover inside. It's a 1-year program, a series of step-by-step lessons presented in short 5-minute videos that even the short attention span folks can absorb. There's trainings to help you understand how to use numerous financial tools, learning at your own pace, on your own schedule. There's over 25 modules. They cover everything from mindset to financial principles and concepts to different ways to invest. You'll also have access to the Fun and Sexy Finance Facebook group, and there'll be monthly live Q&A calls with me on Zoom. So imagine what that will feel like, being totally confident and control of your money. Knowing your numbers, which is crucial for business owners. And finally, being free of the financial stress and anxiety that's had its grip on you for so long. So this is what you're going to get. The Fun and Sexy Finance membership, which on my website is listed as $4,997. And that's a steal at that price. The Fun and Sexy Finance Facebook group, which is valued at $297. The monthly Q&A sessions, valued at $3,000. And as an extra bonus, the first 10 people who sign up will get 6 private one-on-one 30-minute Zoom calls with me that they can use over the course of the year whenever they want. And I normally charge $250 for a 1-hour consultation, which actually, when I think about it, is crazy because that's what I've been charging for decades now, and I've never risen it. Maybe I need to take a look at that. But anyway, at $250 an hour, that makes this bonus a $750 value. So adding all that together comes to about $9,000 of value. But of course, that's not what you'll pay, because if you are watching this video as a result of either being handed it by me or by one of my friends or followers, that makes you special. That means somebody really cared about you to give you this booklet. And so for that reason, you will only be paying $2,997 if you decide to apply and you get accepted. So if you'd like to see whether or not this is right for you, fill out your contact information in the form below and then click the button to schedule a date and time to have a conversation with me. Don't fill out any of the payment info because we don't want your money until we're sure this is going to be a good fit for both of us. And also, we have a guarantee. We really believe in this product, and we want for you to be successful in this, but we want you to feel like you can do this without risking anything. So if after being in the membership for a year and making all the moves, you don't feel like you have the skills, knowledge, and confidence to take control of your finances, then just let us know and we will refund your full purchase price. So if you want to see whether or not this is the right program for you, fill out your contact information in the form below, then click the button, schedule a date and time for our Zoom. Plus, when you join today, I will add a copy of my book, Protecting Your Assets from the Zombie Apocalypse, as a fast action bonus. So thank you for watching this video. If you don't take action today and invest in our membership, you could be missing out on the opportunity to build financial security for yourself and your loved ones, and to have that financial success that you deserve. So are you ready to take control of your finances? This is the system you need. It's easy to follow, step by step, and it will help you to gain confidence and understand how to use financial tools, rules, and strategies. If not now, then when? And if not me, then who? And if not this, then what? The best time to start learning about finance was years ago. Second best time is today. So fill out your contact information in the form below, then click the button, schedule a date and time for our conversation. Take care. Hope to see you soon.